Let's get Tuesday started. This is Frontier Opening Bell with me, Bosin Omofaye, and my panelists. And we appreciate everyone being here this Tuesday. Joshua Odebisi from Vertiva Capital Management in charge of banking analysis. Ali Kansachu, the CEO and founder of Rich Frontiers Management in Nairobi, Kenya. And of course, Ayode Jebo, who is a senior economist and head of research and strategy at Greenwich Merchant Bank. Gentlemen, good morning.
Good morning.
Just a quick touch on the markets as we start today's day. Nigeria stock market started off on a very strong push, 1.73% on Monday, shaking off most of what last week bearish sentiments. Now the index heading back towards 35,000 reading. The Ivorian market softened 0.04%. Egyptian market, the Kenyan market, and the South African market were up also on Monday. So across Frontier Africa, it looks like a bit of a decent Monday to start with, including Zimbabwe's stock market as well. So let's get into East Africa. Of course, Nigeria's biggest story coming from the World Bank. But this is what Ali will bring us up to speed this morning. If he's paying more this morning for fuel prices, according to news that we got late yesterday. The Kenyan authorities, that's the capital market, wants to cut the dominance of foreign investors and the big firms on the NSE. What is this all? What is the CMA worried about? Uganda's central bank left interest rate unchanged 7% yesterday, says it will keep funds moving into the financial firms. Simawa Cement in Rwanda says its revenue went up 1% for its full year 2019-2020. Simawa was listed on the Rwanda Stock Exchange just a couple of months ago. And Ethiopian Ministry of Finance and the Danske Bank are putting a loan together, 8.8 million euros. Reports just in this morning also says that the CDC and China Ethiopia has been able to get the headquarters of the CDC to be built in Ethiopia, beating rivals to the siting of this very important institution. Let's get started on the price of petrol in Kenya. Ali.
So, Boas, we've had this uptick in the price of Brent and in the price of WTI. And Kenyan fuel prices reflect about 6 weeks later. So this uptick is now being reflected. Bear in mind that in Kenya, more than 50% of the pump price is actually tax. So price rises tend to be muted, as do price drops. So because of this very high taxation on each litre of fuel used. But this will be inflationary. We've seen an uptick in food price inflation as well. And therefore, I think investors need to stay alert to the inflation situation. Of course, the big development overnight was from Mogadishu, where Mogadishu basically have given Kenyan diplomats 7 days to leave. This is after Kenya accorded practically state honors to the Somaliland president yesterday and made Mogadishu very unhappy. There's an election coming up there, as you probably know, but that's really been front and center of the political news. Capital markets authority to cut dominance of foreign investors and big firms on the Nairobi Securities Exchange. Well, if they try and cut dominance of foreign investors, the stock market's going to drop like a stone, because Kenya has a participation rate of between 50 and 60% a day as foreign investors. And whilst we want to see local investors being encouraged, the quickest way to do that would be to start looking at offloading government stakes at the stock market, and bringing them at a discount, reigniting that fervor we had in the early 2000s when President Kibaki offloaded stakes in Safaricom and Kengen. But I think that's the real way forward. With respect to the dominance of big companies, well, Safaricom is 58% of the stock exchange. So if you want to dilute that, it's not going to be a clever idea in my view. Uganda to keep the CBR at 7%, maintaining liquidity support. Ugandan economy, because it's a predominantly agricultural economy, tends to do well, but we're now coming up to the election in January, and we've seen quite a lot of contestation on the streets. We've got this insurgent candidate, Bobby Wine. Amnesty yesterday was put out a strong report about the deaths a few days ago of 58 supporters of Bobby Wine. So I think it's going to be difficult for the economy to change gears at the moment. Plus, we've had quite a spike in COVID cases, very correlated to campaigning, because everybody goes out there and, of course, does not practice much social distancing. If you look across the continent, we keep seeing spikes related to political mobilization. Ethiopia, of course, Prime Minister Abiy was in Mekelle yesterday, interestingly dressed in his army uniform, is talking about the operation being over, but there continue to be reports coming out of Mekelle about losses of lives in the thousands and about 1 million refugees. And I think the Ethiopian scenario will all be about how Abiy now tries to bring control and order to that situation, because it remains the most complex part, I think, of the Ethiopian equation, particularly because a lot of other areas also similarly are desirous of some kind of spinning off and away from the center, and he's trying to establish control out of Addis Ababa.
Interesting scenario within the Horn of Africa and East Africa there. But Joshua, let me quickly touch you on what the CMA is trying to do in Kenya, which is the Capital Market Authority, the dominance of foreign investors and the dominance of big firms. Sounds similar to Nigeria, isn't it?
Well, to a certain extent, yes, it is a bit similar to Nigeria, except, obviously the type of investor you're going to see in that market will be, quite different from what you see in Nigeria, at least currently in the current environment that we're seeing, just due to the fact that, our own agricultural sector is not, as well developed. It doesn't play as big a role in our economy as it does for them over there. Just, by virtue of the fact that we're still so massively reliant on oil, and people who are coming in on that front are looking to make a quick profit and get out. Any kind of investment you make in an agricultural economy, by virtue of the fact that, there has to be a planting season, there has to be a harvesting season, will mean that the tenure of your investment is going to be a little bit longer. You're going to think a little bit more long term, and you're going to see the potential for growth, as commodity prices, fluctuate and increase over time. So while there is some similarity, I don't think that, we are attracting the same kind of investors. We're not in competition with them, so to speak, at least from my own perspective.
Great. Let's move on to the Nigerian space. We have a whole lot to discuss with this World Bank latest $1.5 billion approval for Nigeria for COVID-19 pandemic palliative and to support government transparency and accountability program. $750 million on one side, $750 million on the other side. That's on one side. That's just coming through, and a new comprehensive, it's called the Country Partnership Framework for 5-year program, which is a technical support on one side. Overnight, we got the Moody's rating Nigeria's B2 negative, saying deficit and debt will remain elevated, at least over the next few years, 4 to 5%. Then talk about the political risks of Boko Haram, the potential of infrastructure attacks by Niger Delta militants. That struck me in that particular Moody's report, that this is the first time that a mention will be made of a potential infrastructure Niger Delta attacks, which had been quiet over a number of months and years. That, I think, is something I took note of in there. What's your take?
Thank you. We all know how Nigeria is I would say, solely dependent on oil for survival, and how it impacts on the performance of the economy, because most of the revenues are derived from oil proceeds. So, and if you look back to what happened in 2016, the attack from the Niger Delta had significant impact on production. While we are trying to survive the OPEC plus cuts, with any major attack would be on oil production would be a major blow to our recovery. So I align, and it's critical that we need to take into consideration what insecurity can cause and how it can destabilize the economy. So beyond looking at the financial services, the stability of the banks, non-performing loans, it's important that insecurity that triggers instability is also examined. And I think that's the view the Moody's report has also taken, because even in the short to medium term, it also has the tendency of affecting foreign direct investments, which is very important or strategic to even Nigeria's growth or sustainable growth.
When we look at the further details of this particular report that we've seen over the last few days, in particular the Moody's report, let me give Ali, when you look at the political risk content here, or the political risk quotient for Nigeria, are you worried about that, the level of the things that are happening? So kidnapping of about 300 plus schools, pupils, boys in the last few days.
So, Boas, on the kidnapping of 300 something school children, whichever way you care to cut it, it is no small thing. It means that there is simply no exercise of control, whether it's police or state control over that area. So, of course, that's alarming. The other risk, which was there a few weeks ago, was the unrest around the Lekki Toll area. You will remember just a few weeks ago, you have a very young population. And I think this phenomenon is not unique to Nigeria. It's a phenomenon we're seeing across the continent of underemployed youths not seeing a sufficient opportunity being provided by their countries, all hooked up to smartphones, all aspiring to what other youths aspire to. And for me, this is the biggest flashpoint and risk on this continent. And I think what worries me is we have leadership which is increasingly out of touch with these young people. And repression can go so far. You can kill 100, maybe you kill 500, but at some point you can't kill all these people. And I think therefore the political risk of which Moody's is speaking is not unique to Nigeria. But given the context of what we've seen, which is a reduction in per capita income, people in Nigeria are less well off year in, year out. And that to me is a tinderbox that, that can be lit in an instant. So that's what I would mention. And I also think, I agree with the World Bank, you guys really need to just go for the Egypt solution, get the currency. If it devalues, too bad, but people will pile in and you will have a lot of money that will come in because you're a big market, you're a big opportunity, but you're being held back in my view.
Interesting views from you. Joshua, weigh in on these reports and the latest move by the World Bank to support with $1.5 billion US.
Well, so with regards to it, I mean, obviously it's a positive. Any kind of inflow into the country with regard to foreign exchange is going to, create a significant buffer. I think that we'll start to see the effects of this on the parallel markets very, very quickly, and we might even see some improvements in, the exchange rates with regards to the parallel markets.
Joshua?
From that, however, obviously have been applying for, had been looking for, there's still $3.5 billion on the table. But that one comes with a bit more of a caveat. This is more of like a palliative, almost like a palliative, in fact, for the Nigerian government. So to some extent, it does help. but there's still a lot of money on the table that we are yet to access, and I'm sure that the CBN will still be pushing very aggressively for that. Now, as for what's going on, I think as we are currently seeing the price of crude has sort of improved. We're seeing almost $50 per barrel levels, which is a positive. The problem is that our production levels are still pretty low. I mean, overall, we're still hearing from the CEO or the head of the NNPC that they want to increase production to about 3 million barrels a day. That is very ambitious, and I wish that would be achieved. But the problem is the OPEC cuts are limiting us to closer to 1.5 million. And so I don't know what our plan is. Are we going to leave the cartel and go it alone, which would, I think, be very, very detrimental to us in the long term. But at the same time, we are desperately short of FX, and we need this boost for our economy. The truth is, the only way we can improve our oil receipts is to ramp up production. We can't rely on oil ever going back up to $100 per barrel levels. So we're caught in a little bit of a dilemma with regards to
a bit of a dilemma. Ayodeji, I'm coming back to this particular political risk point that Moody's raised when he talks about potential attacks on oil infrastructure in the Niger Delta. Do you think that is the Moody's is hinting at something here?
Yeah, I think there's been, I'll call it rumors because it's not been confirmed, that they've also been agitating in the last few weeks regarding resource control, taking resources from their states and not using it to develop. The resources are being used to develop other states. Which also takes us back to the structural reforms. So I think I won't say it's not been confirmed, but this also aligns with the news or rumors we've been hearing in the past few weeks that the Niger Delta folks are also agitating for more resource control, which if you critically look at that area, there's been no major development. You can't, when you look at the proportionate development relative to the resources that is being cutted. So said the states also needs to focus on looking at, each state needs to focus on looking at where they have comparative advantages and try to improve that, so that once we see if it's possible, we'll go back to those days where you see in the northern region you have a lot of commodities that we can export. You also, within this southern region, we look at what are those products after the African Continental Free Trade Zone would be launched effectively in January. How are we positioned even as a state? Let's not focus on federal all the time to take advantage of this. What are those products that we have the raw materials that we can add value to? We are used to exporting raw materials and importing finished goods. If you look at the foreign trade data, you see that manufacturing sector accounts for about between, I think, 6% or 8% of the total export. So if we don't work towards diversifying our FX base or FX lines, then all these threats from the Niger Delta, OPEC cuts, crude oil price shock will continue to impact us as a nation, and it may be difficult for us to stabilize as an economy, because as you are trying to achieve a very stable growth, any major shock would set you back and you have to start all over again. I think it's very important that we also focus on that.
I get your point. The shocks hit you, then you start all over again. Then it becomes like a musical chair. You just keep going around in circles without being able to break out. I think that's the issue folks are looking about when you look at the 2008 financial crisis and the 2015-2016 recession. And this time around, if Nigeria is beginning to look like you get out of the recession, then you go back to your normal ways, and you come out, then you go back, then you come in, then you go out, until we have a major breakout, like Ali was suggesting, go the route of Egypt, take bold political, economic, and market decisions, then just break the cycle and break the glass ceiling, as the saying goes. Let's look at South Africa, where President Ramaphosa has just announced some tougher restrictions for the holiday period with the resurgence of COVID-19. There will be no lockdown, but the news are being tightened, as we've seen in a bit of other locations around the world, in the US, New York, in Germany, and elsewhere. The J&J, Johnson & Johnson, is applying to register COVID-19 vaccine in South Africa, according to the health regulator in South Africa. Yesterday, the AfDB unveiled the second version of the Sustainable Africa Energy Fund. That's SEFA, by the way, with an acronym, to the stakeholders. Investec is issuing 100 million subordinated unsecured floating rate tier 1 notes, and Botswana Diamonds full year 2020 a net loss of about £500 million or £500,000. Well, we all understood what happened to diamonds this year. Ali, don't we?
Yes.
Not a particularly stellar year for diamonds.
Well, I mean, diamonds typically require a marriage, a very public ceremony, and marriage by Zoom hardly counts for those types.
It doesn't go for the show off,
Yes, yes. I see you've got a diamond over there. Yes, so it's been tough, I think, for Botswana in that regard as well. And obviously, Botswana had quite an aggressive lockdown, and they're highly dependent on tourism as well. I listened to President Ramaphosa yesterday. I thought it was quite a granular speech that he's attempting to calibrate the response. You've had a surge in COVID cases, 77% upswing in the last 2 weeks, some real hotspots around, and he's basically looking to do more of a tier-based system, something that Boris Johnson has been doing in the UK as well. And obviously doesn't want to go into that hard lockdown countrywide that was there before. He made some very choice remarks about people wearing masks on their chins, which is something that we have in Nairobi as well. But, I thought, given the circumstances, that the president delivered quite a sophisticated response to the situation at hand. J&J applying to register COVID-19 vaccine in South Africa. That's a positive sign. It looks like African countries who were behind the curve in terms of vaccine acquisition are now stepping up a little bit. Kenya's ordered 20 million doses from Gavi, for example.
Egypt is importing a few from China.
From China. So I was reading some comments saying, look, it's most likely we're going to order from China and Russia because of price. But, let's see how that is. It's the geoeconomics and geopolitics.
Geopolitics and trade hitting the vaccine.
Yes, sadly, I entirely missed that opportunity this year. Iran around 15. Remember, we had lows this year of above 19. So we've had quite a nice recovery in the rand as people got more optimistic about global trade, and we exited that hard lockdown. African Development Bank. This is the Sustainable Energy Fund. It's interesting because they were ahead of the curve. Do you remember they said they weren't going to finance any more coal projects and extractive oil and gas projects? So, they're putting their money where their mouth is. I think this is a positive development. Renewable energy is such a no-brainer in Africa. Just look at the amount of sunshine we get. We can harness the sun, we can harness the wind. So I think, again, Adesina ahead of the curve, as he tends to like to be.
Yeah. Yes, I'm sure Ayodeji is seeing some sunshine coming through his windows this morning. How do we harvest this for energy such that we can just get this? Because the whole northern part of the country, for example, Katsina State has the are the highest amount of sunshine by those who know science very well, where we ought to have the largest solar energy plant in the country, but it doesn't look happening with the latest kind of a kidnapping of school of 300 school children. And over the weekend, 2 Lebanese expatriates were kidnapped right in front of their factory premises in Ibadan, in Oyo State, the southwest part of the country. This is not good for business, is it?
No, at all. Not. It's not pleasant for businesses. But also speaking to the renewable energy sources that you're talking about, I think if you look at the economic sustainability plan, it's one of their focus to provide solar energy for over 5 million households. I don't know. I think the project have started, and if we're able to effectively implement this, you will note that the rural areas, they don't consume much, but it also has some a major impact or role it will play in increasing business activities within those areas. So if we're able to, and I feel that we can easily even access funds, there are a lot of green bond or green light type finance that we should be able to tap into to provide this. I think the annual rent or the monthly charges around 4,000 naira per month. So we're hoping that if we're able to see this through and we're able to achieve this, it will go a very long way in diversifying our dependence on the fossil fuel energy sources.
Thank you so much, Ayodeji. We appreciate your time. So, in terms of Joshua, let me ask you. Part of the reports in the by the IMF spoke very strongly about the need to still tweak our exchange rate system, whatever, a whole lot more. But again, this is a whole lot of fiscal and external shocks buffeting the country. How much headroom do you think the central bank has here?
Well, so in terms of headroom, in terms of space, I don't think there's that much left. Just due to the fact that we're sort of, I think, if more things go wrong than have already gone wrong, then we could see ourselves in a very protracted economic decline. But at the same time, I think that it's quite obvious that the government and central bank have decided to be a bit more optimistic and believe that things will sort of start to return to normal on an economic front across not just the local economy but globally as well. Because if that were to be the case, then I think that we'll just squeeze through and we would not have to go too much further. There are so many different avenues that the government is going to have to pursue in order to get the funding to continue to spend on capital expenditure to the level that they claim that they have been spending at this point, and also in order to just a bit of a shock to me that at this point the government is still effectively borrowing to pay salaries on some levels. So these things, unfortunately, they're not going to change based on the current government strategy. That's just the truth, is that there are too many projects that are so long-term that before they even begin to yield fruits or, yield benefits for the country, these governments would have already expired and there will be a new government in place. Unfortunately, there isn't enough value creation on, even a short-term basis that can really help to shape the country positively going forward. And all this would have to be achieved through legislation. I've said it many times before, that if you create an environment like, you do what the IMF has said and, sort of relinquish control of your foreign exchange to a certain extent and allow free market forces to thrive. The truth is that foreign investors are just waiting for that opportunity. There are lots of policies with regard to imports and exports that if they were to be tweaked and to be done in a positive way, to be done in a proactive way, would attract foreign investment. And all these things can be done without needing to spend so much on capital expenditure. Unfortunately, that's what this government has sort of resorted to, is, we just need to spend money on roads, fixing this, fixing that. but your policies are still not positive. And that's where we have the biggest issues. Yeah.
I agree with you. You want to keep spending, borrow to spend, but again, you have policies that will unlock investments of free money, in a manner of speaking, and yet you're not going that route. It's a whole lot to work down the line. Let me ask Ali, when we talk about in North Africa, I'm trying to find out what the Egyptians are up to. They seem to have their hands on the handle of virtually everything. EgyptAir, however, is restructuring £10 billion in debts to foreign lenders. It looks like the airlines, whatever happens, are yet to get back into any stable altitude, as it were. For BMCI Money Market Fund in Morocco, the Fitch affirms a AAA rating. Orascom Development is selling stakes in subsidiaries for £128 million. And Afreximbank got another $520 million COVID-19 response fund from MUFG. This is from Tokyo with Love. Ali.
Okay, so let me quickly go through Afreximbank. Their capacity to network globally is second to none. Benedict Oromo held his last annual meeting in Moscow, I remember last year, leveraged that connection. This is now him leveraging the Japanese, and this is obviously a positive outcome. EgyptAir restructuring 10 billion Egyptian pounds in debts to foreign lenders. Look, this is the worst of years for African airlines, and a lot of folks got into this vanity trade. We must have an airline. Everybody you care to mention had one, but really they have bombed because there is just no traffic this year. It's difficult to see when that recovery starts to come in, because I, for one, don't see it before the second half of next year. So they're again ahead of the curve. Most of the African airlines that I'm watching are reactive, behind the curve in dealing with their balance sheets, which have been largely shot to bits, frankly. There's no two ways to talk about it. Borrowing heavily, leasing planes, and simply have not got bums on seats.
Thank you so much, Ali, for wrapping it up for us on the northern part of the continent. Thank you so much. Let's leave it there this morning, gentlemen. Thank you so much to Ayode Jebo of Greenwich Merchant Bank, Ali Kansachu, thank you so much from Frontier Management in Nairobi, and Joshua Debisi, a great thank you to from Veteva Capital Management, an investment and securities trading firm. Thank you, gentlemen. See you tomorrow, Wednesday, and bye for now. Thank you.